Hey everybody, this is David Modell looking at the markets. I've received some emails asking me how I'm going to trade the upcoming Federal Reserve meeting. How am I going to trade the rate cuts that are probably coming? See, here's the thing. Everybody knows that the rate cut is coming, all right? It's not even a question of if, it's just a question of how much. Is it going to be a quarter point cut? Is it going to be a half point cut? I mean, look at the probabilities. This is from the CME, Chicago Mercantile Exchange website. And as you can see, pretty much everybody is betting on a rate cut happening. A lot of people are thinking 25 basis points because 50 basis points, which is what the president wants, that might be a bit aggressive. If that does happen, you know, how exactly am I going to trade it? That's what people want to know. Or if it doesn't happen, well, let me tell you right now, my investing style, my trading style is reactive, not predictive. Okay, reaction, not prediction. That is going to be my motto for the rest of this year and maybe next year as well. I'm going to have to say it over and over. I don't place bets that require a crystal ball. I don't try to predict what's going to happen tomorrow or next week. Instead, I wait until a big event has passed and then react accordingly. If asset prices go down enough that they're reaching my target buy price, then I might get in. See, when you have something that's already known, then you can't really trade it very easily because everybody else knows it too. It's right there in the news. Trump heaps pressure on Fed ahead of likely rate cut. All right, don't miss the real headline here. It's not even about Trump. It's about likely rate cut. If they know it and they're publishing it to everybody, then everybody knows that the rate cut is likely. So how are you going to bet on a rate cut that's probably already been priced in to equities? It's already been priced into stocks. Why do you think the stock market is testing all-time highs recently? Because everybody knows that the rate cut is coming. And by the way, nothing is guaranteed. Notice they did not write guaranteed rate cut, but it's probably coming because the president is putting so much pressure on Jerome Powell, the Fed Reserve Chair, to do this. Here it is from CNBC. On the eve of the Fed's decision, Trump said the Fed should make a big, we're talking 50 basis points, rate cut. That means half a percentage point. That would be a big cut. Quote, I'd like to see a large cut, and I'd like to see quantitative tightening immediately stopped. This is from the president, speaking obviously directly to the Federal Reserve. Here it is from CNBC again. Trump, and this is about the dollar, Trump has reportedly asked his aides, to find a way to weaken the U.S. dollar. Why does he want to do this? And this is part of why he wants to cut interest rates. He wants the stock market to be high, and he wants the dollar to be low in value. Okay, yes, he still talks about how the U.S. dollar, he wants it to be the world's reserve currency still, but he wants it to be cheap. He wants it to be a bargain so that other nations will trade in U.S. goods. He also believes that it's going to be easier for the United States to pay off its debts if the borrowing costs of the debt is lower, and that can only happen if the U.S. dollar is cheap, or that can happen more easily if the dollar is cheap, I should say. So we got the president admitting openly what he wants to happen. He wants a big Fed rate cut, and we all know it's going to happen, and it's in the headlines. All right, but does that mean that you should buy the S&P 500 now? Well, again, all this stuff has been priced in. It's right there in the headlines. If you know it and I know it, everybody knows it. And as we can see, the S&P 500 trading near all-time highs. The Russell 2000, which is more sensitive to actual economic conditions nationally and globally, is much lower. There is a divergence here between the S&P 500, which is somewhat divorced from the fundamentals and from reality, the economic reality, and there's a divergence between that, a rather large divergence between that and the Russell 2000, which is more reactive, more sensitive to actual economic conditions. There is a global economic slowdown due to the trade war, yes, but just even before the trade war really kicked into gear, things were slowing down economically around the world. They were starting to, and this is reflected more in the small caps, the Russell 2000, than in the S&P 500. And so, these two always meet sooner or later. They don't stay this divergent for that long or forever. They can stay for a while, but this is a huge divergence. I can't even see anything close to this type of divergence in a long time in this entire chart. Okay, so these two lines will meet eventually. Will the Russell 2000 come up to meet the S&P 500, or will the S&P 500 go down to meet the Russell 2000? Will they meet in the middle? I don't know, but if this line is more reflective of reality probably than this one, I think we know which one's going to meet which one probably in the near future. So am I buying the S&P 500 in anticipation of the Fed's probable rate cut? No, because I don't like the valuations, rate cut or no rate cut. If you want to find bargains, you're going to have to look outside the box. You're going to have to probably think outside of large caps because they're so expensive right now. For example, and this is from Dana Lyons, from the Lyons Share. Definitely recommend checking his website out if you get a chance. And his Twitter feed as well. So thanks to Dana Lyons for this awesome chart showing that the British pound is hitting an all-time low. I'm not telling you to invest in the British pound. I'm just showing how not all asset classes are overpriced right now or expensive, okay? So you have to think outside the box. How about Bitcoin? Bitcoin hash rates are, I don't know if you can see all the way on the right here, but they're doing quite well. The hash rates are increasing. They're on the rise. That shows a lot of activity, a lot of demand for the blockchain and for Bitcoin, because this is the Bitcoin hash rate in particular, but other major cryptocurrencies are showing similar increases in hash rates. All right, so I hope this helped you out in terms of what I'm thinking. I'm not going to make any moves before this Fed decision, this Fed probable rate cut. It's already probably been, since it's probably going to happen and everybody knows it, it's been priced in already. Any surprises would probably be disappointment, if anything. And so I am not interested in buying the S&P 500 or any components of it right before a situation where the best that can happen is a little bit of upside and the worst that can happen is a lot of downside. The risk reward is not favorable for this, so I'm just chilling out, I'm hanging out, I'm sitting on my hands, and there's nothing wrong with that. All right, as you can see on the screen right now, on Wednesday, you might be watching this on Tuesday, you might be watching it on Wednesday, but Wednesday, July 31st, 6:30 p.m. Click the link in the description below this video if you want to join me for a free webinar. And TradeSpider, or TrendSpider, I should say, will be there as well. We'll be talking about how we like to look at charts and some tools that are cool when it comes to charts. All right, thanks a lot. Appreciate it, and hope to see you at the webinar. Thanks a lot.